Hello everyone, welcome to Trade Breakdown on EU. Now I'm going to start off this breakdown on the weekly time frame because that's where the whole higher time frame thought process started from. So let's go ahead and discuss what was the overall thought process and analysis on the weekly time frame. So in the last few breakdowns, I kept mentioning this range high right here is our drawn liquidity, right? Now you can see that we finally reached that drawn liquidity for the short term, but now we have to determine what is our short term drawn liquidity for the next week or two, but also what's our overall long term drawn liquidity which price will be drawn to. So we have to determine two things, our short term drawn liquidity and buys, and then the overall higher time frame buys and drawn liquidity. Now in order to do that, we'll use concepts such as market profiles, key levels and dealing ranges and so on, right? And we're going to use them to measure where price currently is, where did it came from, and where it is potentially headed to, right? These are the three questions that we have to answer. Now also remember that along with this higher time frame analysis, there is a whole monthly time frame thought process and analysis on its own too, with its own monthly CRT and key levels involved. But for the sake of not making this breakdown too overwhelming, I'm going to skip that part for now and just discuss what we've got here on these weekly and daily time frame, right? So let's go over the charts and see what we've got there. So on the weekly time frame, you can see that we are inside of this range right here. Now what happened is that we first of all took out this range low and we took it out with this big bulky candle, and with this particular candle we also tested a weekly order block in the form of this candle right here. Now the reason this particular candle is my key level and I considered it a proper valid key level is because this particular candle took out this range low. Now when this candle gets engulfed and price closes above it, this will become a valid key level for us, right? Because this particular candle took out this range low, which means it purged liquidity or took out liquidity, and now when this candle gets engulfed and price closes above it, this will be used for future reference and we will call it a key level. Now what happened is the price came down below, took out this range low, and also with that it tested this key level in the form of this order block, and it tested it with this particular candle right here. Now when this candle gets purged or when this candle got purged, I started looking for the opposing of the range to be taken as a drawn liquidity. And then what happened the next few weeks is that we started our journey higher towards the drawn liquidity, which is the opposing end of this CRT. Now when this range high or this CRT's high was taken, right, price then had this down close candle and formed the swing high. Now according to market profiles, price never moves in a straight line, right? It always moves in expansions and then retracements and then another expansion, right? Now what you can see right here is with this particular expansion swing, we took out this range low and this range high, and price formed this swing high, and after price formed this swing high, this whole range became a dealing range for us. This is how you identify a dealing range. When price takes out both sides of the range with an expansion swing, that particular expansion swing becomes a dealing range for us. Now we're going to divide this whole dealing range into two, right? And it's going to give us two regions, the premium and the discount region. Now remember what I told you in chapter 6 about dealing ranges. When we are in a bullish dealing range, we're going to expect price to retrace back to the discount region and wait for price to test a discount key level before it can move higher and expand higher again. Now the discount key level in this whole dealing range was a monthly rejection block, which was right around here. Now you can go over your charts and see it yourself on the monthly time frame, but you can do that yourself, right? So price came to the discount region and it tested a discount key level and also formed this CRT right here and had this retracement profile, and then after that price expanded high again. Now right here before price made this expansion swing, you can see that we've got this particular candle, and when this candle gets purged, you're gonna wait for the opposing end of the range to be taken as a drawn liquidity, right? And then eventually the opposing range high, and this is going to be the CRT for us, right? because this CRT was formed inside the discount region just above discount key level, and then price purged this CRT, tested a monthly rejection block, and then price went higher again to take out the opposing end of the CRT and eventually the range high. Now we've taken out this range high, right? And we are now in a unique position, right? We know that our overall drawn liquidity for the long term is this range high right here, which is yet to be taken. But before that, we have to measure or analyze what is price going to do on the lower time frame before it starts moving higher again to take out this range high. Now our job on the higher time frame is to expect and anticipate what price is going to do before it starts moving higher. Now we know that according to market profiles, price moves in expansions, retracements or ranges, and then expansions again, right? So right here we're going to expect a small retracement because we've taken out a range high, right? And what you can also see right here is that we formed this CRT right here, right? And then we purge this CRT, and now our drawn liquidity for this week is going to be the 50% of this CRT right here. So for the short term on the lower time frames and for the first few days of this week, the drawn liquidity is going to be the 50% of this CRT. And once this drawn liquidity reaches, then we're going to analyze the price action on the lower time frame and see if price shows bullish or bearish signs, and then we're going to decide whether we want to expect higher or lower prices, right? So this was the weekly thought process, right, that I had on Monday, and my drawn liquidity was the 50% of this CRT. Now let's move on to the daily time frame and see what we've got there. So on the daily time frame, you can see the 50% of this weekly CRT right here, but I'm going to remove that for now, and I'm going to analyze and dissect what we've got here, right? So right here, what you can see is with this expansion swing, we took out this range high, and now we can expect price to retrace and have a retracement profile before it moves higher. And that's exactly what I expected here, and that's exactly what price did. So when this high gets taken with this particular candle, and then the next candle opens and price closes below it, this candle becomes a valid order block for us and a valid bearish key level for us, right? Now what's going to happen is price will test this bearish key level, react off of it, and then reach the drawn liquidity, which is lower, which is the 50% of the weekly CRT, right? So on Monday and Tuesday, my drawn liquidity was this FEG right here, which also aligns with the 50% of the weekly CRT. This is our drawn liquidity, and this was my drawn liquidity, right, that I had expected on Monday and Tuesday, which is today, right? Now you can see right here is that on the weekly and the daily time frame, we determined our drawn liquidity for the first few days, and we also determined our buys, right? Now we're going to keep that drawn liquidity and buys in our mind, and we're going to refine that down further to the 4-hour time frame, and then we're going to find CRT there on the 4-hour time frame towards this higher time frame drawn liquidity and position ourselves in this particular direction, right? Now let's move on to the 4-hour time frame and see what we've got there. Now on the 4-hour, you can see that we've got this range low and this range high right here, right? We've also got this range low which aligns with the daily FEG, right? So you can see that these two lows are our high time frame drawn liquidity. Now our job is to position ourselves in a CRT on the 4-hour towards this drawn liquidity, right? Now after taking out this range high, we had this expansion lower, and we almost took out this low before we stopped and formed this swing low. Now for those of you that know about TSK or the sequence, you would know that this is exactly what happens before drawn liquidity is reached, and this is what we call KOD or case of death sequence, right? And what happens is that we have a counter move just before the drawn liquidity is reached, and then what happens is that price confuses the traders and does a turtle soup, forms this turtle soup, and then it again forms another expansion swing lower and reaches the drawn liquidity, right? And this is exactly what happened here. We stopped just before taking out the range low, and then we have this counter move in the opposite direction with this turtle soup, And also with that, we tested this FVG right here, this 4-hour FVG, which is our key level. Now, if you plot the opening and closing times for Monday, then you'd see right here is that the Monday candle opened here, and right away it tested a 4-hour key level in the form of this FVG and reacted off of it during the Asian range, right? So you can see that a key level has already been tested during Asian range, and now during the other half of the day, we can straight away expect price to expand lower towards the drawn liquidity. Now what happened here is that during London Open, we formed this CRT just below this rejection block, and then price took out the CRT during London lunchtime and price expanded lower explosively. This was the thought process on the 4-hour, right? Now let's move over to the 15-minute time frame and see what else we got there. So on the 15-minute, you can see that as soon as this daily candle opened, we had this expansion, and with this expansion we tested a 4-hour key level during the Asian range and the CBDR, right? Now when this happens, you can straight away expect price to expand lower towards the drawn liquidity. Now what happened during London is we formed this CRT, and then during London lunchtime, which is from 5 AM to 7 AM Eastern time, we purged the CRT high with this particular candle, and then price engulfed and closed below this candle and gave us some order 1 entry right here. After we formed this order block and price closed below it, we're gonna take our entry at the open of this order block, right? Stop loss is gonna be above the swing high or the order block's high, and the drawn liquidity or the target is going to be the CRT low and eventually these equal lows right here. This is the model 1 entry that I took based off of my overall higher time frame thought process. You can see that we followed and I followed a logical framework. First of all, I determined our buys, my buys and my drawn liquidity on the weekly and daily time frame, and then I brought it down to the 4-hour and found it a CRT there, and then I matched that CRT with a 4-hour key level, and then I took my entry there on the 15-minute time frame, right? You can see that I followed a proper objective and mechanical logical framework, right? And this is exactly how you should be doing your analysis, and you must have an objective logical framework that you must be following in order to take entries, right? Now you shouldn't just binge watch these breakdowns, but instead you should take notes, and your goal and your aim should be to do your analysis in such logical fashion, right? Don't just watch these videos, but actually make notes and reverse engineer these trades and try to replicate this process overall, and you'll see a huge shift in your trading and your analysis. Now these chapters alone aren't enough to help you. That's why along with the chapters in CPI, I'm also making these trade breakdowns, right? So you can actually see how I apply those concepts and knowledge in the real time, right? Everything is intended everything is intended and nothing is random in CPI. Remember that, right? There's a proper reason behind why I do these and why I make these trade breakdowns, because I want to show you how I actually use these concepts, right? Just those chapters alone aren't going to be enough to help you, right? So you should watch both of them and make notes both for the chapters and even these trade breakdowns.